Want to increase your accuracy and want to hold your bigger trades with the less risk, then you must know how you can do the top down analysis, and it is the only thing that you can do to increase your win rate and also to hold the bigger trades that can pay you a lot more money with the less amount of capital risk. And in this video we will talk about the top down analysis in a detail and why it works and how you should do it. Now first of all, you should know that what is your strategy. Like at this point, like we on this channel use the SMC strategy. Like market is creating higher highs, and when break its first low and tap on any of its unmitigated order block or imbalance or any other POI, which is also not necessary because all these are extra confirmations, but we do not need them. And at that point, when market tap on the POI, then we move to the lower time frames at the same time. Like if this is a 1-day chart, then we can move to the 4-hour time frame when market tap on this POI. Now what can be the structure in the 4-hour time frame? And we will make this in this circle box. Okay, first of all, when market tap on this POI, suppose this is the 1-day time frame POI and market tap on it, then on the 4-hour time frame market is creating structure like this, and when market tap on this 1-day time frame POI and on the 4-hour, it break the first high, which is at this point. This becomes our change of character, and after the change of character you need to wait for the inducement if market hasn't swept the liquidity of the previous pullback. And if it swept the liquidity of the previous pullback, then you do not need inducement. And after the taken out of the inducement, market tap on the POI. Now at this point, this can be the 4-hour POI. This can be a order block, imbalance or something of that nature. And then when market tap on this 4-hour POI, then you can again move back to the 15-minute time frame. And now, as you do the things in the 4-hour time frame, this is the 4-hour time frame POI. Then you can again wait for the market to repeat the same things in the 15-minute. Like in the 15-minute, market can also move something like this and it break above the first high, and based on the liquidity sweep or not, you can wait for the inducement and buy at this point. And the thing you have bought at 15-minute time frame, you can hold it up to the daily time frame POI, which is at this point. And in this way you can catch the bigger trades as compared to the other random trades. And now we will also give you the examples on the chart. Okay, this is the daily time frame, as you can see that, and at this point market was creating higher highs and higher lows, and this was the break of structure to the upside. We can wait for the market to break below these lows and tap on its unmitigated order block, order flow or imbalance. As you can see that this can be the POI at this point where we can look for a buy, and this is the daily time frame POI. And when market tap on this daily time frame POI, we can move to the 4-hour or 1-hour time frame. Like if we use the daily time frame as our highest time frame POI, then we can use the 1-hour as our lower time frame for the confirmation that whether market can go upside or not. Like at this point, market tap on this point, and when market swept the liquidity of the previous pullback, which was at this point, so market has already swept the liquidity, we wait for the market to break above the first pullback, which is at this point. So this point become the change of character, and after the change of character we again need the market to tap on any of its unmitigated POI. Like this was the change of character because market has broken below above the previous high at this point. Now market has already swept the liquidity, so you only need a unmitigated POI. So where is the unmitigated POI? There is no unmitigated POI because this is a single candle only at this point, and all these candles are internal candles. So when market break above this high, which is at this point, like this can be the order flow, then you can look for the lower time frame confirmation at this point for buying. Now we can turn this into the orange color so that we can move to the 5-minute time frame and look for the confirmations at this point. Now we can lock this point and move to the 5-minute time frame, because when we mark the POI in the 1-hour time frame, we need the 5-minute confirmation for buying and selling on those POIs. Now we cannot go back in the 5-minute time frame or at this point, So for example, we can only use 15 minute, but you should use the 5-minute time frame, and we will also take the examples of the 5-minute time frame. Now in the 15-minute time frame, market has also swept the same thing, did the same thing in the 15-minute time frame, swept the liquidity of the previous pullback and also break above this point. So this is a confirmation that market is likely to move to the upside, and when market tap on this unmitigated order flow, or you can say imbalance, you can look for a buy at this point. Now we can turn this into the green color so that you can know it. This is the our refined version of the 1 hour time frame, and when market tap on this point and move to the upside, you can also take entries based on the single candle order block, which can be at this point or directly when market tap on this point, and you can put your stop loss about below this point, or you can also put your stop loss just below this point. Now you have moved from daily time frame to 1 hour time frame to 15-minute or 5-minute time frame, and instead of risking this much trade, like in the 1 hour time frame, you may took entry at this point, put your stop loss just below this point and target the same 1 hour PO high, which is at this point. But now you are taking this much risk only. Now in the 1 hour time frame, the same trade can be of 7 RR, but in the lower time frames with the multiple time frame analysis, this trade can be 1:43 RR trade, and you can hold the bigger trades in this way, and we will also look for the another examples in the same way. Now again in the daily time frame, as you can see that if we suppose that market has swept the liquidity of the previous highs and market is likely to draw to the downside, so this is our daily time frame POI which market has respected. Now this is our daily time frame POI, and as you can see that market tap on this point, and at this point you can move to the 1 hour time frame and look for the confirmations to the downside. So this is our 1 hour time frame, and in the 1 hour time frame market tap on this point and also break below the first pullback, which is a change of character, and after the change of character we wait for the market to take out the inducement. So where is the inducement? As you can see that this point is the inducement. Market has swept the liquidity at this point, and market also moved to the upside and swept the liquidity of the previous highs at this point. Now after the sweep of liquidity in the 1 hour time frame also, we again have to wait for the market to break below first pullback, which is at this point. This is the first pullback. Market again turned bearish in the 1 hour time frame, and after the 1 hour time frame structure shift, where is our inducement? This point is the inducement, and after taking out the inducement we can look for a sell. Now when we can sell, as you can see that this was the only candle where we can sell. This is already mitigated in the 1 hour time frame, so we cannot sell at this point. So now we can move to the lower time frames at this point so that we can look for the lower time frame confirmation whether market is likely to drop to the downside or not. Or if you want to take extra confirmation, you can use this candle as a single candle order block. When market tap on this point, you can look for a sell at this point. Now we move to the 5-minute time frame and look for the entry at this point to the downside, because our daily time frame structure is also bearish if it respect this order block, and 1 hour structure also shift to the downside. So if 5-minute time frame structure also shift to the downside, then this is a high probability, low risk and bigger RR trade for us if we hold it. Now this is the 5-minute time frame, and we can go back and look for the entry at those points. Now as we have discussed, we can also look for the lower time frame entry at this point in this circle if there is a no unmitigated PO in the 1 hour time frame. Now in the 5-minute time frame, this was the first low broken, so this is a change of character, and after the change of character we again have to wait for the market to sweep this liquidity. Market has swept the liquidity and didn't close the candles above this point, so you can look for the sell when market break below this pullback, which is at this point. Now this is the point where you can sell. Now when market break below this point, you can look for a sell on the next candle opening. This is your risky stop loss, this is your safer stop loss, and if you put stop loss above this high, you can target the daily low, which is at lowest point. Like this is your entry point, and you can move back to the daily time frame, and this trade is like at this point. This is your running trade, and you can target this low and also take partials below this low or on the previous lows. Like at this point, this can be your full trade that you can hold, and in the 5-minute time frame, this is a 30 RR trade if you want to take it. And after, again, if you want to take the entry on the single candle order block in the 1 hour time frame with the lower time frame confirmation, then you can also take entries based on that. Like this was a single candle order block, market break below this point, so you again have to wait for the market to create the change of character in the 5-minute time frame. This is the change of character, market move to the downside, so you again have to wait for the market to take out the liquidity, which is at this point. And after that, where is your unmitigated POI? This is your unmitigated wick, because there is no unmitigated POI. And when market tap on this unmitigated wick and create a single candle order block, you can look for a sell. This is your entry, this is your stop loss, and you can target the low. Like this is the low, previous low, and this can be the 1:67 RR trade. This is your low risk entry, and you can hold the bigger trades with small amount of risk. In this way, you can plan your multiple time frame or top down analysis trades, and this can help you to take a small risk and hold the bigger trades. Thanks you for Thanks for watching this video, and if you find this video helpful, please make sure to like and subscribe this channel, and also follow for more videos.